In this presentation, we will record deposits into QuickBooks Pro 2020, QuickBooks Desktop 2020. The deposits we will be entering here are the types of deposits we are more likely to see when we start up a new business, including the owner putting a deposit into the business from the owner to the business, or taking out a loan, getting money in the format of a loan and depositing that into the business. As we enter these deposits, we'll be thinking about how we can enter the deposits. There's a few different ways we can do so. We'll think about entering as a check register and entering with a deposit form. Here we are in our Get Great Guitars file. We currently have the open windows open. You can open the open windows by selecting the view dropdown and selecting the open windows list. We're going to be entering deposits into the system. As we stated, there's a few different ways that we can enter the deposit. One way is to enter the form of a deposit form, and you can find that, usually I would think of that form on the home page over here in the banking section, record deposits. However, we're going to start off with the other format because I want to point out that when you're looking at cash and recording cash transactions, there are many times when it might be easier to go directly to the register. The register might be more familiar with people too, and therefore if you're thinking about, especially if you're on more kind of a cash basis type of system, entering things into QuickBooks, it may be faster to enter the register directly. If you're thinking about if you're going through the full accounts receivable process, then of course you're going to need to create the invoice, receive payment, and following these arrows, following this path is a nice way to format that information. However, if that's not the case, if you're entering deposits from something like straight from the bank statement, if you're using more of a cash-based system and just basically taking that data and entering it directly into the system, using the deposit form may be a little slower, much slower than just entering that information directly into the register. The register might be something, again, you're more familiar with because it looks like kind of a bank checking account with your checkbook to follow along with the register. So we're going to go to the banking drop down. We're going to go to the use register. As we do so, it will typically default to the checking account. However, every balance sheet account also has a register in a similar format because QuickBooks wants to set it up in such a way that you can basically, record things in an up and down type of fashion. So every account in essence has a register. If you happen to have something else open, like the customer or vendor sections open, it may default to some other accounts such as accounts receivable or payable. So just be aware of that. If that happens, just close out of the vendor sections that you are in, and then it'll default to the checking account. So we want the checking account. We're going to say OK. Here's the format that we have. We see the prior transaction we had up here. Obviously, you'll recall that we did not enter that $25,000 into this data screen, into this register input screen. However, it shows up in this register screen because all transactions related to cash will be here. Whenever you think about a register, just remember which register you are in. Usually, you'll be working with a cash register, and that'll be easy to think about. If you're working with any other register, you want to keep in your mind which register am I in, because you'll recall that every transaction will have at least two accounts that will be affected. So when you're in, say, for example, here, of course, the checking account, the check register, then when we think about the ups and downs, or in this case, they call them the payment and the deposit increase, payment decrease, then obviously we're talking about the checking account increasing and decreasing, and the other account that will be affected, which will go here, will then go to whatever other account is affected. So we only really have to think about one half of the transaction, not in terms of debits and credits, but in terms of whether or not it will be increasing or decreasing. The QuickBooks will then assign whatever the debit or credit is to the other account as needed. So all we have to do is list the other account that will be involved in that format. Also note, you can think of these registers as it's basically a journal entry without the debits and credits. It has the debits and credits. QuickBooks will report debits and credits, but it's going to try to report this in an up and down type of fashion. So here, anything that's a deposit or increase would be a debit, the payments would be a credit, and then of course the other side would be the opposite, debit or credit, to the other account that would then be affected here. Okay, so we're going to be first starting off with entering a transaction. If we look at the data input fields, I just tab through these. We've got the date, we've got the number. Now the number is going to apply to usually a check number, but that's only if we have a check. If we don't have a check, we can enter something else there or simply not enter anything into the number field. Then we've got the payee. And again, that only is really applicable if we are paying something out, a check or something like that. In the deposit, we may not have a payee. We'll just leave it blank. Then we have the payment field and the deposit field. We're going to be in the deposit field here. Then the other account other than the checking account that will be affected, the memo field is next. So if we go through this, then we're going to enter the deposit. We're going to enter the deposit as of the beginning of the year. We're entering new transactions now. So it's going to be 01/10/20. So January 10th, 2020, we're going to be working and entering all our information in 2020. It'll typically default to the next check number that would be available. This isn't a check, so you want to make sure not to put a check number there. You may just want to put nothing or just put deposit. So make sure that you do not use the check number that populates because it'll auto number the next check number that will be in line, and your checks will be kind of off if you do that. So just make sure to delete the number. And then the payee, we don't have one because this is going to be a deposit. You could put, the owner's name in there if you so choose, but you could just simply leave it to blank. And then we're going to put the deposit. We're going to say it's $65,000 from the owner. The owner's putting in their initial investment into the company. And then the other side then is going to go to some type of equity account because it's the owner putting it in. This is part of the confusing process of starting the business because usually when we have deposits, the other side would be revenue, cash. Hopefully the deposits normally are coming from the customer. But if the owner puts the deposit in, then it's going to go to some type of equity account. Now, I'm just going to put it to the equity account that's going to be the main equity account, owner's equity. You could create another equity account if you so choose, which would be owner investments. If you wanted to break out the investment portion and the equity portion, you could do that and make another account, or you can put it into basically owner's equity, same difference. Most of the times by the default, notice QuickBooks sets up a draw account. So when we take money out, we'll take it out of an equity type of account, but it'll be a separate draws type of account. So QuickBooks is in essence suggesting to us that we should be tracking the draws. Notice it does not by default create an equity account for investments. So when we put the money in from the owner, it doesn't have a separate equity account. That's kind of typical. So we'll keep with that function in here and just simply put it into the owner's equity. So owner's equity, and then the memo, we should probably put something in the middle. In memo, we'll put the owner investment here. Now note what you do not want to do here, and this is going to be something that is often an error when the owner puts money in because it's a deposit. If you default it to an income account, it'll go to the profit and loss. It'll increase your net income, which isn't proper. And if you make your tax return based on that, you're going to have too high of a net income. You actually could pay taxes on it. So you want to, again, make sure it goes to the equity. It will not then be on the profit and loss, but only on the balance sheet. Then we're going to go ahead and record that. Now it's going to say, look, you've recorded something to the retained earnings account or retained earnings type of account, an equity account that we usually use to roll over things into. And we're going to say that's okay because this is an equity transaction that we rolled into there. Thank you for the note. So there we have that. And now if we want to check our financial statements, let's go to the financials. Let's go to the balance sheet and the income statement, reports, scrolling down to the company and financial, taking a look at the balance sheet standard and the balance sheet standard date as of 12/31/20, the end of the year. There's our checking account. If we double click on it, 90,000. And I changed the dates from 01/01/20 to 12/31/20. There's the 65,000. If I double click on this, it put it in there as a transfer, which is one of the two forms we could use to an increase, either a transfer form or a deposit. So there we have that. The other side then going down to the equity section down here, equity, double clicking on that and changing the dates to 01/01/20. There's the other side of the transaction. If we take a look at the profit and loss, just to check out if anything happened there shouldn't be. And we'll go to the reports, company and financial, profit and loss. Change the dates to be 01/01/20 to 12/31/20. And nothing is there. That is good. The other report I think would be easier to check these numbers on if you get used to it, but I know most people aren't as used to it, is the trial balance. reports, accounting and taxes, trial balance. If we go to the 01/01/20 to 12/31/20, notice how much cleaner this is, and you can say, okay, the checking account went up, the equity account went up, and you can see that much more quickly. We'll keep these reports up as we move to the next item. Now we're going to enter another deposit. This time it's going to be a deposit for a loan. So we took a loan out from the bank, and we're going to be increasing then the cash for the amount of the loan, and then the other side's a liability. So it's a good idea to kind of think about this as we enter these, right? Cash is going up, that side's going to go up. The other side's going to be some type of liability kind of account, a loan payable type of account. That loan payable then is going to be the other side that will be increasing in the credit direction. So if we record this now, we could do this in the same area, go to the register and enter the deposit in a similar fashion as we had done before. But this time we're going to use the major form that we typically use to make a deposit if we're going to go through the standard process, which would be to create an invoice, receive payment, record deposit. In this case, we're not recording a deposit related to a receipt from a customer. However, it's still a deposit. So we're just going to record the deposit portion using the deposit form. So we'll go to the deposit form here. I typically go to the home tab when I'm using the deposit form and go to the deposit from that location. However, you could also go to the banking dropdown and make deposit in that place as well. So we're just going to tab through this. We got the deposit to, it's going to be to the checking account, and we only have one bank account, so typically that will be the case. It'll default to the checking account. That's where we're going to deposit to. And then we're going to change the date to January 10th. So that's going to be the date that we want to use, January 10th, 2020. It will be a deposit. We'll keep that as the memo section. We're going to say it was received from, and we'll actually put a bank here. So we're going to say we got the loan from Chase. So we're going to say we received from Chase, tab. And notice we don't have this set up. Do we want to set it up? I'm going to say, yeah, go ahead and quick add it. I'm not going to set up all the detail for it. I want to just basically quick add it. Now, usually when we have a deposit, it would be a customer. In this case, it's the bank. It's a loan, not really a customer, not really a vendor. So the most appropriate one may just be to say other. It's not a customer. It's not a vendor. It's not other. If you choose something other than that, if you choose a customer or a vendor, it's not going to be the end of the world here. It'll still be you'll be able to make the deposit. However, other is going to be the most appropriate in that situation. We're going to say then, the account that's going to be the other side. Now, remember, when we're thinking about the deposit screen, you're thinking about the journal entry. What's going to happen here? By the fact that it is a deposit screen, that means the checking account's going to go up. Cash is going to go up. That's one half of the transaction. Where does the other half go? That's what we're going to put here. The other side of the transaction, it's going to be the loan. We took out a loan. That should be a liability type of account. We already have one set up here called loan payable long term. That's where I'm going to put it. It's a long-term liability type of account. And then you might want to put in the memo, it's a bank loan. You may want to put something like the last 4 digits of the loan number. More information, the better within the memo, so that if there is a question, you can go back and check it out. Then I'm going to tab over no check number. No, I'm not going to put a payment method this time. We could then put the amount, $50,000. So we took out a $50,000 loan. There's the total $50,000. And we're then going to say save and close. Let's record this, save and close, and then we can check out our reports once again. So if we go to the balance sheet, we're going to say, see, and look how much longer this report is than the trial balance. That's why I would kind of get used to looking at the trial balance. It's a lot cleaner to look at both sides of the transaction within it. If you go here, you can say, well, okay, the checking account went up. Double clicking on it, changing the dates from 01/01/20 to 12/31/20. There is the second deposit we had for the $50,000. Double clicking on it, we then go to the deposit form that we just filled out. So we actually use the form that QuickBooks will be the driving form. Now, QuickBooks, you'll note, used a transfer form up here, which is the other way you can have a deposit. But one of those two forms are going to be increases, a deposit or some type of transfer form. The other side then go into the loan. It's down here in the liabilities type section. And we have the loan payable long-term $72,000 now. If we double click on it, change the dates to 01/01/20 to 12/31. There's the $50,000 there as well. Closing that back out. If we take a look at the profit and loss, which is now in the open windows, the income statement type of account, no activity is happening here. If I refresh it, that's because it's a loan. We didn't earn any revenue. We don't have any expenses yet. Nothing on the P&L, nothing on the profit and loss, nothing on the income statement. Same name for the report, or different names, same report. And then if we go to the trial balance, then we could see it nice and easily and quickly here, right? Even if we got the checking account went up and the other side went to the loan payable, it's a lot cleaner to see the two accounts that will be affected on the trial balance.